каком моменте вы на запись поставили?
Нет, вот еще не ставили. Нет.
А, все, слава богу.
Ну, к сожалению.
Да, прекрасные люди из маркетинга. Давайте продолжаем.
С этого и начинаем.
Большое спасибо, Нина.
За возможность, да, опубликовать эти видео. Ладно, все. Порядок здесь лучше еще?
Дима,
Че?
последний организационный вопрос.
Давай. Если звук отвалился, моментально наш в этом Вадим и говоришь, где он отвалился, и этот момент нужно будет поговорить еще раз. Окей.
А звук отваливается часто?
Нет.
Нет.
Вообще не отваливается, но мы всегда.
Но
Окей.
обычно, да, в самый ответственный момент он отваливается. Это
Все, понял. Окей, не вопрос.
Все, если что, давай, прям жестко следи.
Окей.
Все, запись идет. Будьте готовы?
Okay, so before we start, we'll start now. They're already recording. So yeah,
We'll do an intro and then we'll just...
Yeah, the intro. I introduce myself. I introduce you, director of research from Freedom Capital Markets, and then I ask you about like travel or I don't know how your day.
Yeah, we can do a little
Yeah.
intro type of...
Yeah. And then we'll go to the career journey and lesson learned. Actually, yeah, I will a bit introduce the part where I will say that our team is expanding a lot. So, it's
we can talk a bit about how we work together and
yeah, sure. Yeah, okay. Okay, let's start.
Okay.
Hi, I'm director of research in Freedom Broker, and так, заново. Okay, sorry. I miss.
It's all right.
You're managing director, right? Is it proper or it's director?
Yeah,
Or
just,
how
you
it's
just call me just director of research. It's
Okay.
fine. Yeah, I don't. I'm not picky.
Okay. Hi, my name is Vadim Merkulov, and I'm director of research here in Freedom Broker. And with me here is Ed, also director of research in Freedom Capital Markets. How are you feeling, Ed?
Hey, it's great to see you, Vadim. We've had a great week here in Almaty.
Yeah. So, how was your flight actually?
It's a long way from New York, but it's great to be here to see the team at Freedom Broker and appreciate all the growth that's been happening over the last year or so.
Yeah, the team is growing very rapidly, and we actually wanted to hear from you about some insights of what your actual job was, or career insights you have, maybe some advice for young analysts. So we will speak about that on this interview.
Perfect. No, happy to share.
Okay, so you've spent decades analyzing the software industry and the tech sector. Do you actually remember this, like the first moment, the exact moment when you like understood that this is it, like this is your career choice?
Yeah, it's a great question because it was almost accidental that I would fall into equity research and cover technology. When I was younger, I was always into gadgets, so I loved technology. It was something to be really interested in. But when I went to business school and started learning about finance, it was at the height of the internet bubble, and there was so much interest in companies like Intel and Microsoft and Yahoo. So I was actually doing a lot of work on the internet economy when I was in business school, and I got an internship working at CIBC Oppenheimer at the time, covering enterprise software, which was a little bit mysterious because a lot of the companies in enterprise software are technology companies, but they produce technology that's only used by corporations in their back offices or in their IT departments. But as I got into it, it was so exciting, and I would just say gradually realized that there was so much happening that was evolving, a lot of interesting innovators, and I would say it wasn't one particular moment, but it was I would say within 6 months of when I started as a research analyst and learned a little bit about what that was all about, that I was really happy to be in tech because it was the most exciting sector of all.
Yeah, and it was during the dot-com bubble. And so like you have a pretty long career, and we have like, so from dot-com bubble, and right now it's AI cycle, right? And you had all this experience in tech sectors, you see it's evolve. So can you share with us the event in your career which provided you the most difficult yet the most valuable lesson?
Yeah, it's, covering tech can be really challenging because it's a very volatile sector, but it's not immune to macroeconomic shocks. And I was thinking about what had been most impactful in learning in my education as an analyst, and I actually have to say that it was in the wake of the popping of the internet bubble. What happened was there was what you would call this irrational exuberance or euphoria in the late 90s caused stocks to go up and up and up. And analysts that didn't have to be particularly skilled to put a buy on a stock and just watch it go up because there was so much enthusiasm. When the market peaked, which was actually in March of 2000, it started to crack very slowly. The market would go down bit by bit, and I noticed, nobody wanted to admit that maybe the peak good times had passed. But what happened? There was what we'd call almost a slow bleed for about a year, and what punctuated this was it was a big hit. It was the September 11th attacks, which actually closed the markets for about a week. This was actually the first of several big shocks that I've seen subsequently in my career. But what happened was nobody knew what was going to happen. Nobody knew what the impact was going to be on the markets. The attack happened on a Tuesday, and the markets were closed through Friday. It was the first time it had ever happened. And a bunch of the analysts, I was working at Merrill Lynch at the time, covering software. What we had to do was figure out what are we going to do with our models, because nobody knows what's going to happen. The economy is completely shut down. Our estimates we couldn't rely on our estimates because we knew, at the very least, a lot of these companies would be losing at least a week's worth of business, probably a lot more because we didn't know how long the travel disruption was going to occur. So what I learned actually from one of the directors of research at the time was he said, you got to cut your numbers, but you got to cut them fast. You got to quick and cut them deep, because the last thing you want to do after a big shock like this is do little cuts. It's a lot easier to slash your estimates and then bring them back up than it is to wait and see what happens whenever you get a huge shock like this. So what's happened with that, though, where that became relevant was later during the financial crisis, when sort of saw the same pattern happen in 2008 when you started to see the cracks in the financial market. What happened was that the market would peak, it would come down a little bit. People would say, "Oh, it's only a short-term correction." This was in March when Bear Stearns folded. There was a lot of turmoil in the summer, but then in September, everything started to really collapse, and that's when we had to have the big bailout at the end of September. And again, that was where people had to slash estimates.
It was like about the uncertainty, right?
Yeah, it was uncertainty, and the same thing happened.
Similar to COVID, or not?
Exactly, COVID was exactly the same thing. So when during COVID, I was working in research management at a Japanese bank, and when we saw the stocks just get crushed after the shutdowns in March of 2000, it was a very familiar feeling. Now, a lot of the younger analysts had never seen anything like this, and I was able to share with them some context. First of all, when you're looking at your estimates, you got to take a good hard look and try to figure out what the impacts were going to be. And in the software market had evolved from being a sort of a product and sales model where deals had to be closed by the end of the quarter to software as a service, which kind of smoothed out the volatility. But also, if you're holding your stocks, you had to figure out if you wanted to hold on or if you wanted to sell. And I think holding on ended up being, really valuable. But
so to sum up, it's more about be more direct, fast, and just cut your losses right there at the moment, and then rebuild the estimates that.
Exactly.
Okay.
Yeah.
Okay. So. Okay. Yeah, we'll continue right now. I thought we cannot close it or open it. Okay. Okay, so we have a couple of movies describing how the Wall Street operates and investment banks, traders. I don't actually recall any movies about analysts, like equity research. Do you know any?
Not many that come to mind. I mean, I think you could think about The Big Short.
Yeah,
there were a
but-
couple of analysts, but it didn't really show them doing their work.
Yeah, that's true. But in any case, like the work in the large investment banks, and you've been there in Bank of America as well, Merrill Lynch, sorry, but it's a part of a Bank of America right now. So you know how big larger investment banks operate, how it's different from what you actually seen in the movies, even though maybe not about the equity research, but probably about investment banking traders.
Yeah, I mean, I think something that people may not appreciate, if you think about who the best analysts are and how their work ethic is really what distinguishes them. When you would see, there were a lot of analysts that got into the office at 6 o'clock in the morning, and they would work until 8 o'clock at night. I mean, they really worked hard, and you didn't see a lot of the work behind the scenes as much when they would go on CNBC, or Merrill Lynch had a morning call at 7:20 every morning. But part of this, of course, depended on the sector that they were covering. When you cover tech, most companies would report earnings after the close of markets, so you end up putting in a lot of late evenings. A lot of it is not particularly glamorous. You're in the office working on models, you're writing, but a lot of it is just getting on the phone and calling companies, calling contacts in the industry. I used to describe it as being like a blue collar job. I mean, if you're an auto mechanic, I mean, the really successful analysts thought of it as being like a blue collar job, and that's in some respects that's what journalism, really good journalists are. They wear out their shoes, they get out on the street, and they mix it up.
Yeah. Okay. Yeah, but when I was studying in university, I have this picture in my head about the analyst doing his work, doing the evaluation, but it was more like the guy, in the back side of the room doing his work. That's it.
Or like the guy with the green eye shades, the accounting, with the little sleeves to protect from the ink getting on their shirt. Yeah.
Not like that, but it was more like so I didn't picture any calls at all. No talk with any other people. Just read the proxy statements, 10Qs, 10Ks, that's it, without any communication. And I was surprised that there is actually a lot of it. Actually, most of the work.
It's funny, the way that research teams usually ended up being structured is that the analysts would spend all day on the phone. All they would do was talk. They would just be talking to people all day. And I remember, you'd be unlucky if your office was next to somebody that had a very loud voice, because they would just be talking all the time. But that was really the role. That's the role of the senior analyst, who's very established. Is they end up being a broker for information. So when they talk to their clients, they're getting insights on their stocks. They're sharing the insights that they have. But then they're also reaching out to contacts that may be in the industry, to try to get insights. And a lot of the hard work is done. The heavy lifting, as they say, was done by associates. So some analysts are pretty hands-on doing writing and modeling, but a lot of analysts didn't do any of that, and they would delegate it all, and all they would do was talk all day. And sometimes they would go out and they would visit clients. They would visit they would try to visit the locations of where the businesses were. But it becomes all communications at a certain level.
Okay. So let's move about in more depth in terms of what analysts is actually doing, and I would to hear from your experience when you're trying to evaluate a new company or do any new research, right? What are the top 3 metrics of the red flag? What can you say? Okay, you look at this, this, and this, and then you understand there is something wrong with the company.
Oh, okay. That's a great question. So the first thing that is really that jumps out, of course, are revenue trends, and that's pretty obvious. You can look at revenues. Are they trending up? Are they trending down? Are they do they look unpredictable? And then there's cash flow, because earnings can be manipulated in a lot of different ways, but when you look at, particularly when I would look at software companies, you look at the rate of their cash collections. And there was one metric, for instance, in software that people would always look at, which is the days sales outstanding, which is the total receivables, divided by the number of days in a quarter. And if you started to see those days creeping up, it would tell you that the company, it was taking longer. The customers were taking longer to pay. So that might suggest that there might be a problem with the with the product, or there could be other issues. So you definitely look at that, and then you also want to look at a little inside the operating model into margins. I mean, gross margin, of course, is really critical to understand what the mix of products and offerings are that give that gross margin. And then, of course, you look at their operating expenses. And there's some, particularly in tech, it almost came down to a formula where there was a certain percentage that they should be spending, and if they were spending too much on certain elements, if they were spending too much on sales and marketing without generating a lot of revenues, or potentially even underspending on research and development, those could be real red flags that could tell you there could be issues for a company down the road.
Okay, so basically, as my understanding, it's like basics. We don't go to the balance sheet and goodwill or how they finance their operations, like long-term or mid-term. We just look at the revenue, margins, operating metrics, right?
Yes, and cash flow.
Cash
because as they say, earnings are an opinion, but cash is a fact.
Yeah, that's true. That's true. Okay, so you specialize in enterprise software. Why should the investor pay more attention to boring backend infrastructure like cloud service and cybersecurity than to high-profile consumer apps? I mean, because you can feel even in media, right? It gets more attention. I mean, cybersecurity is very important part of the cloud business, in my opinion. Not just enterprise software, but yeah. What do you think about it?
Yeah, it's a great question, because when you look at a consumer product that you can see and touch and play around with, investors often they're familiar with it. They feel like they understand what the product does. The challenge with a lot of consumer-based businesses, and I think I'll get more to the nature of the products in a minute, but there is a big difference between having an end user that's a consumer and an end user that's an enterprise, like a large company. Also, a difference if your customer is government, but typically consumer adoption for very successful companies can be very rapid. But then if consumers lose interest, you can see usage and revenues tail off. And you'll see this a lot with consumer products that may be very hot. Think about something like Crocs, the sandals. I mean, the same thing. They were hot for a while, then they went away. In consumer, you'll see similar dynamics around certain types of video games. But in enterprise software, enterprises buy software with an eye toward their long-term sustainability. And it's all, for instance, cybersecurity is really difficult to understand. It's actually one of the most complex technologically. It's difficult to quantify the return on investment. In fact, a lot of cybersecurity is sold purely on fear. If you don't buy this, then something bad is going to happen to you. But companies look at it as insurance. They have to have it, because if they don't, there are terrible ramifications if they have an attack. So the other nature of that, those types of products, whether it's certainly cloud services, infrastructure software, is they tend to get embedded into the organization, and the revenue tends to be very recurring and very sticky and very stable. If you think about the mainframe computer business, mainframe computers were like the first technology that businesses bought, going back to like the 1960s. But I can tell you, 50 years later, there were a couple of $1 billion a year in business that companies were spending just to keep those systems up and running. And it's hard to believe, but things move very slowly in the enterprise world, and once you're in for a long time, and they can be very profitable businesses. That's why Larry Ellison, for instance, is extremely successful with Oracle, because you basically, you don't get fired for buying Oracle. Buying SAP in your system. One technologist I know described, when an enterprise buys SAP, it's like pouring cement into an organization, because just doesn't go anywhere. So that's the difference. It's a lot harder to understand, and as an analyst, it's a lot more difficult to explain, what the companies do. So a good analyst will be able to translate the technology into terms that an investor can understand.
That's really important, actually.
Exactly, yeah.
Because we actually talked about this in our conference yesterday. So it was the main point of the conference, like how to deliver this information, even though the subject of this information is very complicated, like enterprise software. And in terms of like people understanding, right now people understanding everything, I think, about AI, it's changing every second, every minute, but people still like familiar with it so much. And I mean, ChatGPT is a consumer app, which makes it very understandable why it's a good investment to actually have or share. I mean, it's private, but still, like, they want to own something that correlates with AI. So what do you think? Is it like just the beginning, like multi-year or decade beginning of the trend, or we're on the brink of the collapse, like, I don't know, 99, or we're at 91, or just somewhere in the middle?
It's a great question, Vadim, and I would answer that in two ways. I think there is a bubble of sort in sentiment, so we may be at the peak of a hype cycle. But also from a long-term standpoint, I think there's no doubt that we're very much at the beginning of a very, very long cycle of really transformative adoption. And I forget who it may have been Bill Gates who said that people tend to overestimate the near-term impact of technology, but underestimate the long-term impact of technology. It's funny, when we talk about AI like it's something new, actually artificial intelligence, the term was invented in the 1950s. And I know people that were studying in the late 80s and the early 90s, and there was actually a term called the AI winter whenever the technology would go out of favor. We've had a few AI winters since, but what's unique now in the last decade is that we've had this enormous explosion in the power of compute that you have at your disposal now. Just one NVIDIA GPU chip can do more compute than a rack of mainframes 50 years ago. And cloud computing also allows access to just almost unlimited computing resources that you couldn't 20 years ago. You just couldn't do this, and the cost, because of the cost curves that continue to decline. We know about Moore's law, but there are a few other corollaries like Kuhne's law, where the bandwidth declines, storage declines, or the cost of bandwidth and storage decline. You're able to do so much more with at so much less cost, and it's accessible. It's allowed these incredible breakthroughs that we're seeing right now that are it's astounding.
Yeah, so actually it's very interesting because I'm holding here on my iPad, which is not like the latest edition of the Apple product.
It's a 15-year-old product that kind of changed the brand new
but I
market.
mean, in terms of the compute power, it's actually over than the chips that were on the rockets in 60s and 70s.
Yeah.
So it's
you're holding more
amazing.
compute power in your
that's-
hands than it took to send the rocket to the moon.
Yeah, exactly. So it's very interesting how it plays out in the end. But I think it's a well-established trend. So do you have any ideas on subsectors or sub-industries in the tech sector, which is very undervalued right now? Because I mean, AI, it's obvious theme. There are certain risks, as you mentioned. But what do you think, like in terms of like 2-3 years of investment, like which industries are very established and very undervalued, undervalued Sorry.
Or maybe need a little bit more that
let
are
me repeat
poised, that where the sentiment hasn't gotten ahead. Yeah. It was
So let me repeat the question first.
Sure.
I think we'll cut it if anything. So what do you think in terms of the investment thesis on sub-industries in the tech sector? Do you think there is any undervalued industry in terms of if we're going to invest of like 2-3 years from now?
Yeah, let me answer that in a couple of different ways. I think from near term, we're having this conversation in the wake of the software industry just getting completely demolished in terms of valuation. I think that may be maybe an overreaction in a lot of cases. That software as a service is not likely to. It's not likely to completely go away. So I think there is some value to be found there. But I would also say adjacent to technology that companies, for instance, in manufacturing technology and robotics, have not gotten a lot of attention right now. Those are harder businesses to scale because they require manufacturing and materials science. I'd be looking at some of the industrial technology companies. Some of them will sell to defense contractors, but some are related to manufacturing again, supply chain and logistics, and even sectors like agriculture and farming and agriculture and transportation. All of those sectors that have been what people think of as old economy are adopting these new technologies and have opportunities to generate new levels of efficiency, effectiveness, and profitability that they take a lot longer because the industries are more mature, but they rely much less on information technology. I think the emergence of some of the powerful AI, generative AI, can solve problems that people have been wrestling with for a long time. Good example of this is predictive maintenance, where you'll have you have these big machines that work in a factory. Companies like Siemens and Schneider and ABB specialize in this. Rockwell International do these control systems. But what you can do by collecting data from machines is you can identify the patterns that will tell you when a machine may need to be fixed. And ideally, it'll tell you, hey, you need to turn this knob and tweak this dial and pour a little oil in here and prevent a costly breakdown. And those types of solutions, when they go into place, really create enormous value. And I think those are areas in kind of people don't really think of them as tech industries that may be the biggest beneficiaries of all.
It's actually a cool idea because I can see that software enterprises, especially, and some software companies are afraid that AI going to replace them. I mean, we can see what Cursor and the Lovable and other apps are doing with their programmers and the computer science guys, right?
Yeah.
And it's actually a cool idea when you think about the real economy. I mean, AI won't replace it right away, and there is so much potential in terms of the efficiency if you apply this technology. Yeah, that's actually great. So on top of this experience we already discussed and cool ideas as well, what actually motivated to join the Freedom Holding?
So I was, when I first heard about the opportunity here, that Freedom was building a research effort really from scratch in the United States, I was intrigued because I had gone through this process most recently at a Japanese bank where we had built research from the bottom up. I'd been a publishing analyst for about 17 years at a number of firms, and after I had one firm that I'd worked with ended up exiting the U.S. business, and after spending a couple of years in blockchain and crypto, I thought, I want to learn how to run a research operation. So we built a pretty nice business at this Japanese bank, but they decided to go in a different direction, and I was not really looking actively, but when I heard about what Freedom was doing, this concept of working with a already pretty advanced startup and infrastructure coming out of Kazakhstan, of all places, I was intrigued. I said, "Wow, Kazakhstan, sign me up. That sounds really cool." So I came on board without really knowing what was what was totally going on, and as I learned, it's been an incredible ride. I mean, I was just so excited about the quality of the people that are joining, the growth, the ideas, and also this opportunity to really grow. I think a special organization, from the ground up. You don't get that opportunity very often.
Yeah, that sounds great. So you already had the experience of building the research team in your Japanese bank. So how does it feel right now to build it in US from the scratch?
Yeah, I'll tell you, it's never easy because finding the right people at the right time that have the right cultural fit is it's tricky. You got to talk to a lot of people, and we had certainly. The U.S. actually has gone through some changes, even in the short time that I've been at the firm. We went through a complete strategic reset about a year ago, but that allowed me and our leadership in the U.S. to really chart a direction where we wanted to go, which was to be much more focused on small to mid-cap industrial technology, consumer, and in healthcare, and find analysts that we kind of look for analysts that are either very experienced and are interested in building something new, and also finding up-and-coming analysts who have some good experience but have been limited in their career development. So you have to talk to a lot of people and find the fit. As soon as people begin to learn about the story, they get intrigued, and I think we've been really fortunate so far. Currently we have 7 publishing analysts in the U.S., and it's a team that feels really optimistic. We're growing. People want to come to work, and they like working together. But it's hard work, and you have to expect that growing something from the bottom means it takes time to get, in the U.S. institutional clients, they don't come to your door. You have to go reach out a lot, and it's a lot of people ignore you, but you just keep coming at them, and until they start to listen to what you say, and then you build those relationships, and then it progresses.
Yeah, so during those interviews, especially if we consider like junior analysts, what will be the deal breaker for you in those interviews? Like soft skills, hard skills, what are you looking for?
Well, no, I think both can be deal breakers, right? So if somebody does not have any background in finance, and somehow you're talking to them, and if they don't have any idea or any curiosity about what the job entails, it's sort of hard to justify that. Another kind of interesting point that reminded me that if you're when you're talking to somebody who wants to come join a team, if all they do is talk about themselves and what they want to do, it doesn't quite help. It doesn't give you a lot of confidence that they're, that they want to be a contributor to the team. Ideally, you don't, for a junior person, you can't expect that they know everything about the business. That comes with experience, but you want to see curiosity. You want to see some familiarity, particularly some hard skills. Just learning how to work an Excel spreadsheet, some knowledge of finance, financial accounting, how to read a financial statement, and an understanding of what the goal is to create research that is insightful, where you're helping investors make better decisions. And learning all those skills takes a long time. But this I would say the soft skills are really, those can be the tipping point. If you have 2 analysts both that have, or potential analysts that both have the same kind of hard skills, we say it's the soft skills are a little better, because ultimately an analyst is somebody who has to present it's a front office job.
Yeah.
So they got to deal with clients, and they're going to be a representative of the organization as well.
Yeah. Okay. Hear you. And it's very hard to pick in this financial environment. So it used to be like you can finish the history degree, right, and become an investment banker. Right now you have to have like 3 degrees in finance,
right.
masters, some courses on Coursera about DCFs, and still you will be competing with other guys. So yeah,
True.
maybe the
although
soft
I
skills
would
will
say
be the tipping point.
Yeah, if I could make a point though, I do think that what does differentiate good analysts is actually having a wide range of interests, because if you're curious about industries that go beyond the industry that you focus on, I mean, you're going to be more likely to spot connections and patterns that might be a little bit out of the box. And I think well-rounded people who at least have a curiosity and a work ethic too, end up being really good analysts. So I would say, analysts do come from a lot of different backgrounds and end up being very successful. Yeah. But you got to have some basic skills. Yeah, it's harder to get. You can't come in completely cold.
Yeah, that's true.
If you're an English major, for instance, who wants to be an analyst,
it will be
probably you need to get a few more skills to at least get off on the ground floor.
And to connect those dots right now, you need to read a lot of information, and it's very hard. Do we need to? Нам нужно перезаписывать сейчас вопрос? Okay. Okay, and in order to connect those dots, analysts or becoming analysts needs to read a lot of information, right? I mean, my inbox right now is full of like different subscriptions. I try to limit them, and they're getting stuck on each other. So it's actually, I mean, for me, it's very hard to to follow everything and try to stay connected with the market. I mean, considering the managing job and like operations and all that stuff. So, what advice you will give to stay updated and how to connect those dots? Like, what's like secret here?
Yeah, there are a couple things. Part of it is just to be pretty thoughtful about clearing out your inbox with that spam on a regular basis. It's hard to avoid, right? Because if you do follow a lot of different sources, I mean, it used to be easy if you covered information technology. Research departments actually had a library where you would go talk to the librarian and you would ask them for subscriptions to Information Week or IT Daily, and you would have physical, you have a pile of physical magazines you could work through. I think there are some ways that you can use information sorting tools that can help you. I actually use an old technology called RSS reader, like really simple syndication. You can get a reader. Google used to have a reader, and then they got rid of it. But what it does is it takes the headlines of different publications, and you can look at just a stream of headlines and just be able to scan headlines before you. And if you click on it, you can see at least a preview or sometimes the whole article. So that actually allows you to scan a lot more information really quickly.
So it's not about to filter all this noise. You just, I don't know, subscribe to the Bloomberg or Wall Street Journal. You need to actually scan the whole pile of news.
Oh, absolutely. What I used to do was I would set up a folder in my just the tabs on your internet browser. You set up a folder for each one of your companies, and maybe you want to check those once a day. Maybe you don't need to do it. Maybe once a week. But have not just the website for the company, but maybe there might be some blogs. Some of the people that work at companies had really interesting blogs, user groups in technology, or and then also have some industry, specific industry sources. You know, every industry has the magazines that that write about industry news, and that's something that's, and it's not, and those aren't financial publications. Those help you get smart about the industry that you're in. Yeah.
Wow, that's nice. I actually didn't think about it. So this is actually advice for me.
Yeah, it can be super helpful. Yeah, no, we were, because you have to find a lot of creative ways to learn about companies, and you know, sometimes a lot of companies have video content. They'll post it sometimes on YouTube, and if you find that, well, LinkedIn is also a great resource, because if you should follow companies, you can follow executives on companies and see what they say, because they'll often post articles. And if they're good thinkers too, what they'll do is they like to share other articles that people should read. And I used to learn a lot of, I'd find all kinds of interesting insights from people that would just be posting things on social. If you follow the right people on social media, they'll share they can share a lot of cool stuff.
So about the insights, I mean, considering your experience right now, what you would advise to like 20 years old of you? Like, okay, let me.
If we're starting again,
Okay, I pronounced it wrongly. So talking about the advice, with all that experience that you have, what you will suggest to 20-year-old you? 20-year-old self. Oh, sorry, I'm messing it up.
What would I say?
Yeah, 20-year-old self. I don't know why I'm messing it up.
We'll do it again. Okay.
Okay. So considering all this experience and talking about insights as well, so what can you suggest to 20? Okay, I'll just read it once again. Considering those insights and your experience, what advice you would give your 20-year-old self if you could go back in time?
Well, I'd tell myself to pick a better career than being a musician. That would be the first thing. I actually came from, I have an unusual career path where I was a musician, but I think what I would have told myself, I would have told myself to have a much more open mind about how taking on different opportunities or different careers than I initially thought. I had grown up.
But I mean, those times were about the rock, you know, the music.
Everybody wanted to do that, but I used to say, oh, I'll never be an investment banker because I'm always going to be cool. I'm going to have long hair. I'll wear funky shirts. But then, a few years later, I found myself in a job as an investment banker, and I met the people. I said, "What? You know, this is actually pretty cool. The people are smart. You know, some of them are, you know." Not always the type of people that you want to hang out with, but you know, but I did make some lifelong friends when I worked in investment banking, and understanding it was very cool. And I think you got to keep an open mind about, you know, different types of disciplines and look for those signs. You know, the universe is a funny thing. You know, if you have an interest in any type of subject, try to keep do get specialized, but also keep a wide, I call it a wide aperture. Like if something sparks your interest and you want to go down a rabbit hole, as they say, and learn about something, you know, the universe might give you a sign and say, hey, this is something that you should learn, because becoming an expert in any subject will teach you how to have a lifetime of learning. I'll tell you one thing that I learned about being an analyst over time is that I think if you apply yourself, you know, wholeheartedly to becoming an expert, you can become an expert and go on TV and talk about anything in about 6 months. It's, you know, you don't have to go to school. I mean, it's different from if you're a doctor. Okay, that's different. You really do have to go to medical school for many years, but almost anything else, you can get really, really smart just by immersing yourself. There's so many wonderful resources that are free now that where you can access information. The challenge is I would tell myself again, I'd say be focused. You know, don't. And of course, my wife would tell me, you know, that I was too focused on having fun instead of you know, working hard on my career. But I think when you end up being, if you end up being both like a well-rounded person, a balanced person, but with a lot of curiosity, you won't even feel like working hard is work. It's just going to be, fun. It's just going to be what you do every day when you wake up, and you'll be a little smarter when you go to sleep every day than when you woke up, and then you can't wait to do the same thing the next day.
Okay. So I bet like most of the guys who will be watching this interview aren't musicians, but they still worry about what will AI will do with their job. And I mean, I don't think open-mindedness will help you with that, right?
No,
I agree. The balance needed to be there, to be around a person who can talk, who can like count, who can do every other activity to communicate with people, and to well fit in every like different environments with the company, investors, etc. So like the question is still there. Like, will AI actually replace the analyst?
Yeah, it's it's a great question. I think we heard at the at the conference yesterday a couple of times people saying that soft skills, what we say interpersonal skills, do become that they're really important. And I would highlight that even though AI tools are automating away a lot of the tasks that junior analysts do, truly, the way, in our business, the way we get paid is through human-to-human interactions.
Yeah.
So those don't go away. I mean, you ultimately get the way you create success in investing is through better judgment or better information, and that the human judgment is ultimately a result of having a personality where you learn how to interact with people. You want to learn how to present, do public speaking. You want to learn how to organize your thoughts in a way that is coherent. Although analysts, it's okay if analysts ramble on a little bit sometimes. If you're an analyst, you want to learn how to ask multi-part questions because you only get one chance, so you ask, pack as much as you can. But above all, I think you want to work on those those social skills. And in fact, I used to give my kids a book by there was a guy named Dale Carnegie who wrote a book called How to Win Friends and Influence People. And it's a very simple book. I think it's probably been translated into almost every language. But I gave it to my kids, and it teaches you a few techniques of just how to be interested in other people. Because if you learn how to get other people to talk about what they care about, interestingly, they start to like you more. And that's actually a great foundation for creating relationships with people who become not just friends, but also business colleagues, potentially clients. Yeah,
it's a great advice.
Yeah.
And actually, I have a follow-up on that. So you already mentioned that there is some automation in the works, right? So basically, if we imagine the analyst job, you can use Perplexity right now to actually build initiation report. I mean, it's not that great, but still, like, give it a couple of years, right?
Yeah.
But you like specifically outlined the communication skills, soft skills, and what you said about like make people talk about themselves, and
that's right.
They will get more friendly with you, right? So, but I mean, the ChatGPT is doing that right now. Like, you can talk to it. It will be always friendly with you.
It can, right.
It, like, most of the times it will agree with you and like say how smart you are. So, I mean, it's just like one step away from like fully automate the entire workflow of the analyst. Is it not?
Yeah. Well, it depends, of course, what personality that that the AI is going to have. And I like to joke that
can you imagine like equity
you could have
research
somebody.
analyst?
Yeah. I mean, there's, as I said many times, there's many ways to be successful as an analyst as there are different types of personalities. But you don't want to be, annoying, abrasive, overly aggressive. I think what you're saying though about the automation of tasks and reports, it's going to happen, but it really comes down to telling stories, and the way a human can tell a story, it's still like the real thing. I do believe that ultimately I mean, you think about in Star Trek, right? You know, people are traveling in the future on a spaceship, and the only food they eat is made by the replicator. You push the button, it comes from a replicator. But you know, these days we have people like to go to farm-to-table restaurants, and they like to sit with people, you know, together. That's the nature of being human. I think those are still aspects of ultimately what creates value. As an analyst, you know, you need to talk to people in person, and you listen to what they say, and you can make those judgments, because you may have a machine isn't necessarily going to analyze body language or tone of voice in the same way as somebody who has real emotional intelligence. But hey, you know, it might take a few years that we get to what Ray Kurzweil called the singularity. And by the way, I highly recommend Ray Kurzweil's work. The Singularity is Here, to think about what happens in the future. But you know, we're human animals. We all have our emotional, you know, and physical and you know, intellectual needs, and I think that's always going to be the core of where the value in business resides. We'll automate a lot of things away, but we'll all be together and hopefully get along as well as we can.
Okay, yeah, but actually it reminds me, like, you know, that this communication and how people interpret and how they tell the story. I remind myself of the movie I'm the Robot with Will Smith. You remember? Like, and the robot was saying during his discussion with the police officer that like Will Smith was asking, like, okay, can robot draw a picture or like write a symphony? And I mean, like, looking at the AI right now, I mean, pictures, it's not a big deal anymore. They're making videos right now. And Spotify is full of AI songs right now. I mean, this is crazy.
It is. Well, that's why you also have this kind of counter trend. I mean, I would just tell you, you know, where I live, you know, the restaurants are full. People like to go to concerts. Even though music itself as a business has been commodified, people want to go. They want to connect with other people. And listen, we are actually incredible biological machines, and every human being has, you know, we have our own a magnetic field around us. If you're in a group with people, you know what it's like to be singing a song with, you know, 200 people at the same time, and that feeling that you get is never going to be replicated by machines.
No, on this inspiration note, I suggest we end this interview.
Yeah, let's go sing some songs. I think that's
Thank you for
the
coming.
next step. Yeah, thanks,
speaking
Vadim.
with
It's
you.
always a pleasure, and always happy to be here at Freedom Broker.
Perfect. That's it. Thank you, Ed.
Okay,
it was
yeah.
great.
All right, Vadim.
Nice talk.
I think we hit a